bank trap. Have you heard of the one bank trap? And this is only applicable if you've obviously got more than one property, but from the beginning, if you're going to buy an investment property, usually you'd think it'd be easier to keep everything at one bank. And they will obviously tell you that because they want all of your lending. But what can happen when you're near retirement is if you've got everything with one bank and you want to sell one out of those properties, it's actually up to the bank, or can be up to the bank, to decide what happens with your sale proceeds. So imagine you want to go on a $100,000 world cruise. You sell your investment property thinking that you get to keep all of the sale proceeds, but then the bank says, hold on, you're no longer working and you've still got debt with us. We don't think you can afford it, so we want those sale proceeds. And then they use them to pay off the remaining debt and you do not get to go on your cruise. So to avoid this, you could consider splitting your lending and properties across multiple banks. So let's say you have your home at one bank with as little mortgage as possible, and then you have your investment properties at another with as much lending as possible. And then if you want to sell one of your investment properties, then it's only paired with what's at that bank as opposed to what is at the other bank where your home is, and just de-risks from this potentially happening. Now, of course, if you're in your 30s or 40s, you're probably thinking, oh, I'll do this when I'm 60. But when you're 60, you're not going to have as many options because your loan term is going to be shorter, or you have less income, or things will be different. So it's kind of like front footing something that could potentially happen in the future.